5:58 a.m. Pacific Standard Time. Today's date's 11/15/211. 2011, November 15th, and Turkey Day isn't too far away. Here's what your hand was dealt. You were dealt with a very significant European crisis again for the third time in the last 2 weeks. 2 weeks we had big markdowns. NASDAQ futures were down 30 handles earlier in the morning around the world. They're only down 13. We had economic data that was released about 30 minutes ago, retail sales and PPI, and some of the things that came out that weren't too bad. And now, having said all of that, in the pre-market, you can see that price line is a gap down, but notice that the gap down list is diminished in value compared to the other markdowns that have happened in the past 2 weeks with the very same yield in the crisis part of it. Those are those yields over there in Italy now. And then the Greece problem, France is coming into play. We already know about all this and have for a couple of years. And we are still in the midst of it all. So one thing that we find different, Google closes at 613, but look, it's not being marked down $10 in the pre-market futures, nor are a lot of the other ones. On the gap open up list, you don't have anything except Apple. $1.25, and Apple hasn't performed that well in the market. Once again, it is a pre-market time to understand the worldwide connectivity. Oh my goodness sakes, do you know what that means? That means how does the U.S. separate itself, and how do U.S. fund managers who were beaten up in all of this European stuff. Look at MF Global. That whole firm went down over making big bets on Europe. Europe has caused people a lot of problem. And it's caused a lot of liquidation around the world. And the liquidation remains at high levels. Why? Because everything that happened back in 2008 and 2009, there are a lot of things that are going to happen. The thing that I'm focusing on this morning is that pre-market gap down right now. Yes, we have a reversal in play. S&Ps are down, but that lower end of that S&P, that's going to be that 1215 area. And the Dow futures are only down 78. They were down 130, 140 early on. So they've cut their losses significantly. NASDAQ futures down 13 and a quarter, and they've cut their losses significantly. So one of the things that we want to point out to our MMTs is in the trend structure, we're going to put out, yes, we do have a lot of problems going on right now. Again, that same tune has come into play, and we've already rallied for October, and we're in the middle of November, going into what we call a holiday period over the next out of the next 10 trading days, going into that Thanksgiving period, and we'll be covering that very in depth. So look for the Apple trade to gap down. Before, with the overnight pre-market futures and everything going on around the world, Apple would be usually is marked down $4. All right, we do have a slight markdown in stocks. The key is how they're going to hit that lower level on the strong ones, such as Google. And I'm going to be going over the 605 call, 610 call versus the 610 put and in the money 620 put. And the ratio gap down right now is where this will sell down and hit that support. We know that 607.50 is about a good drop that we would look to for that support level, okay? And or the same type of buying that we seen yesterday when we ran up to 618. And that even with the markdown and all of the bad news that's coming out of Europe at the moment and Italy at the moment, is that they're not being slaughtered as they were 1 week, one day last week, and there was a day prior to that. There was 2 days on the Greece deal, on a Monday, Tuesday, and a Wednesday on the Italy deal of last week. So basically, MMTs, this is the gap open up and the gap open down. So Apple leads the way. There's not a big list. And on the gap open down, well, hey, once again, between bear and bull, you don't have a huge gap down list either. You don't. And your diminishing or contracted price gap downs, meaning that they're very shallow compared to other ones in pre-market futures. We have a variety of all of these events, and you can go back in your MMT video series, and you were trading the markets live. You can go back and take a look and see the differences for now. The trick is, though, maybe they're holding the gap futures. Anything that breaks key level support levels will be shorts automatically. Okay? If we don't have a higher price support levels from the previous day's trend and last week, meaning that the leadership names have to, their pullbacks have to be diminished. Meaning that in this case here, let's say a diminishing pullback would be like yesterday. It only pulled back within pennies of the close, about 3/4 of a dollar, and then we ran up to 618 here in Google. So we're going to be taking a look at what the differences is we were looking for a bottom in Apple. And how were we looking for a bottom? That means that when all the sellers were out of the way. When all the sellers are out of the name, that's when we look to buy. We always do, and we always have done well by doing this over many, the last couple of decades. It's worked quite well. Watch that support level. I will be giving out that $375 call right here that got marked down yesterday, $4.60. I'm all over that one. And it is a monthly options expiration. Let us not forget that, MMTs. And listen, just because that we're not getting that big markdown, the change up could be that we roll up, and if we start to see any heavy selling, then we know that that markdown is in play. It may not show it in the futures as it did the first two times, and yes, it could make us think that everything is a lot better this time than it had been the other two times, but what really could be behind the story? We'll find out between that buyer and that seller on the opening bell. I will just take another very quick view of where 60% of the program trades occur. And where is that? That's on the NYSE, New York Stock Exchange. Now, let's take a look at the gap open down list on the NYSE. Not that long. And the gap downs are all the people that are straggling with some kind of news to them. But look, the gap down on the NYSE is not severe. So the pre-market futures are holding a price. MGI, there's got to be some news. Dick's Sporting Goods came out. APC up $1.66. This is what the gap open up is on the NYSE. So you can clearly see that what I'm saying outside of all of this with the Italy deal is how that human being is going to come in, and what is their psychological pro forma going to be like on that opening bell. Are they going to have fear again? It'll be clear when you look at the fear indicator in the VIX, VIX.X, and the VXN, which equals the NASDAQ 100. Both are fear indicators. And is that fear consolidating up here at higher levels? So the Dow futures are only down 70 handles, but let us not forget that it's year end. Yes, it is the best time of year for equities. However, we've already rallied 200 points off of the S&P 500 low that we called for at the end of September. And in the first couple few days, the first week of October, we have this big rally where we're at right now. And we have this big thing about all these banks going to be clearing their problems up. No, they're just put on hold They're not going to be cleared up, and a lot of this stuff is going to be a 2012 issue. Once again, how do I trade pre-market? How do I trade pre-market futures relative to equity prices? And what are they going to gap Apple and sell it and break that low? We'll find out. Pre-market says that we're going to buy the 605 call, and I'm going to give bids on this one here right now at $7.50. That's the first bid. Yesterday's low was 903. The high was 210. You put a bid there and you leave it. Markets can be made above that bid, to be bought and sold before they ever get down to those wholesale levels. Okay? When it comes to options, options are not made and real markets are not made. They're tradable on the opening bell, but the real market in the pit is not made for at least a half an hour or an hour. Okay? So we're going to be dealing with the 610 call that I like. And where do I like my bids out here? At 470 for now. Yeah, there's going to be markets made above that. What do I care? I'll make those markets, I'll buy and I'll sell them. But I'm keeping my bid out here at 470 on the 610 call for now. That's on that call. On this put call here, 12, 17, 16, 20, I'm going to add to the position that we currently have at 1160. You would have to come down in Google for this price to drop. The other option is that if we maintain above 1560, 1590, we can sell the ones we own and try to buy cheaper again. Should we get a chance to limit out, you don't have to take a loss on this one because you've got the 610 put that we're going to deal with. And within the 610 put, we're going to deal with the fact that they close at 530. You got a little bit of slight gap down. Put a limit order out to sell this one on the first pass. Let's say on the opening bell, and we'll know here in about 19 minutes, is what Google's going to do at its support level, which would take this contract up. You would put a limit order out there at 7.5 to limit out. That's $2 above that close. But that gap down from that close is not going to hit that price right on the opening bell. But you would have a limit order out there. Now, everything is subject to change between the buyer and seller. So everything that's being said is always constantly, minute by minute, being reevaluated and resubmitted based on what happens. Once again, it's been our pleasure to introduce you to the pre-market phase, pre-market futures. How do I get involved? How do I square a position in pre-market futures for the opening bell? That's going to happen in 19 minutes. We did the gap open up on the NASDAQ comp. We did the gap open up and down on both the NYSE and NASDAQ comp. Watch the short on this frickin' Apple. When it goes up, when it comes down, it's got to build the close, meaning that if we go $1.50 below it and we get support, or $1.10, wherever that is, that pullback to support should be diminished in price action from 379.26. So the lower that number is, let's say we do sell down, and we do come down here to the previous day's close. If we go below it, it's only within 50, 60 cents that finds support, and in the application, this thing will be burning hard. Remember, it's been sold down. Nothing's changed in its business model. Steve is not here, but Mr. Cook, who runs the company, is very capable. I'm concluding the trade management, and I'm concluding that Italy is involved, and that bond yields are the same ones that had marked down U.S. equities just last Wednesday, where these gap down in pre-market futures were $10 versus a couple of dollars, $2 here, and that the Google trend is strong, and we'll be focusing on that. We'll be monitoring the tops in the indexes